Hi there, traders. This is Brad Gilbert with the FX Market Insight for Wednesday, the 19th of May. All right, now let's just have a look at what's going down. We've got the US dollar taking a bit of a slide to the downside. Now, US Treasuries, they've lost their mojo in the sense of they are no longer driving the dollar direction. If I just give you a look at the yield curve, you'll see that the yields are once again higher, right? Up 236. I mean, these things are up. The connection with the dollar at this point, it's no longer the raw nerve. You come back and look at the volatility index, and it's pretty steady again. Like the market's sort of comfortable with what's going on in the market, which is a good thing. That means probably don't expect a huge amount of volatility. But what we're seeing is a bit of a continual glide to the downside of the dollar. Now, equity markets, US equities, slightly lower, but 0.5, 0.6, 0.7 down. It's hardly really getting going. I mean, the US equity futures at the moment are down a further 0.3. Now we're starting to get some movement on the dollar. You'd expect the dollar block to be taking a bit of a hit to the downside, but they're not, right? They're actually up. And the dollar, it's not going up. These puppies are going down as well. So we've got a bit of a situation here, right? You've got to try and work out now, as you come into trading today, try and work out where the action is. As in where are the focal points? Now, if you look at the US numbers here, housing starts slightly lower. The change here, I mean, this is inconsequential data, but it all paints a picture, right? Massively weaker numbers there. If anything, that's probably given the dollar enough weakness directly from the macros, which is good because we know when they're coming out and what's happening there. Just pushing the dollar to the downside. Now, there's been a couple of things. So the dollar index sliding lower, breaking down through 90, the figure. You can see some stop losses were triggered underneath that. At the same time, it was the catalyst for the move above sort of 121, sort of 70. You see these stop losses triggered in the euro above 80, and up she pops, right? So you see these stops triggered in the euro. Sterling was already above the level. It's sort of stalling above that support level or previous resistance. And Aussie and Kiwi are just dragging the chain. Right, and you got a little bit of a sub correction here in dollar CAD, but overall this puppy has been heading down, and dollar yen's now gliding down, as is dollar Swiss. Once again, nice clean moves through 90 the figure in dollar Swiss. Now we've got a situation where, right, the movements have happened. Stop losses have been triggered here on euro, dollar index, dollar Swiss. There would have been some the day before on sterling, and some as cable. Dollar CAD as it triggered back above that level of breakdown. Would have been a few weak ones there. What you're going to do now is we're trying to work out, okay, so there's still this dollar weakness. Thursday, we've got the FOMC minutes. The market is waiting for those minutes to try and work out, is the Fed going to stay with their current stance, which is basically they're not going to raise interest rates. We had two Fed officials, Bullard, I think it was, and another lower tier guy come out after the CPI last week and mention again, the Fed are going to hold their ground. They're not going to do anything on inflation for the time being. So I can't see the Fed minutes doing anything else. I think they're going to continue with the mantra, we're going to let inflation run. We're not doing anything, right? So that should add to the whole dollar weakness scenario. Right. So, but that's where we are with that. So equity markets, I don't think are running too aggressively at the moment because they need the information. If the Fed comes out and says, we're definitely not doing anything, you'd expect the US equities to be up about 2%, right? That would be a bit of a risk on situation. Dollar block should rally and the dollar fall. That's the way things have been working at the moment. Equity markets have been in the driver's seat. Now, on top of that, we are seeing the economic fundamentals come into play. We've got a big bunch of UK data coming out. So make sure you are focusing on sterling, right? The benefit of focusing on sterling, just give you a look at the virtual trading desk. Lee here had a great setup on sterling yen, knocked in a bit of cash here on the next move up. It's a pretty simple setup, right? You get, you focus on the currencies that are moving where there's data. And at the moment, that is sterling is one of the key pairs. Now, because of how silly Metastock have been with regards to taking off the numbers here, I've got trading economics. Maybe get onto this site. They've got a lot of the data, the forecasts. So what we're looking for is we're looking for sterling to continue the top side. That's the current trend, right? So you get 0.3, 0.7 for the month-on-month, year-on-year. If you have a look at the trading economics, you've got the numbers here. So 1.4% is the forecast, 0.6% is the forecast for the month-on-month. They're the numbers you need to follow, 1.4 and 0.6%. If they're greater than that, sterling rallies. If they're weaker, it may dull that sterling rally to the top side. Now, when you come down here a little bit further, if I just scroll down, we've got some inflation numbers out of the Eurozone. Make sure you check these out as well. I'm not sure what happened to trading economics, but they had 1.3 as the previous number. Now, with this one here, you're looking at 0.8, 1.6%. As I said, the 1.6% was the final number last time, so don't worry about that one. So pretty much as expected, a little bit weaker. Now, that if it's weaker than that, it may soften the move on euro. We may get a nice move down. If it's greater, we may get a bit of a drive to the top side on the euro. But now, I think this is where the best trading opportunity comes from, and it's understanding the market and connecting the data. Now, the Bank of Canada 2 weeks ago came out and refined or brought forward their forward projections of interest rate hikes by 2 years to 2022. If inflation is really strong, it supports that view. You know, you may see dollar CAD drift to the downside. If these numbers here are weak, right? And if I just scroll down here, let me just get off that. Scroll down here, have a look at these Canadian inflation numbers here. Looking at 3.2%. So they're looking for much stronger numbers, right? 3.2, 0.4% month on month. If they come out stronger than that, well, then you're going to get that move, a little bit of a move to the downside. But if they come out significantly weaker, it goes against from what the Bank of Canada said 2 weeks ago. And we may see a big correction to the top side. So for me, over the next 16, 24 hours, dollar CAD, right, and the Canadian crosses have got to be on your radar. Of course, have a look at sterling and euro. Sterling crosses may be worth having a look at with the CPI data coming out. But look at the CAD and the CAD crosses, right? This is where the action is. And if you have a look at this move. So when did the Bank of Canada have their little spiel? Wrong screen. Let me get you on this one. Right here. See that massive move down? It gave this thing a whole new lease of life, fresh momentum. Drifted sideways, and we've just seen it dribbling to the downside ever since. So if these inflation numbers go against what they said up here, we should see a decent correction here, at least 150 points to the top side, right? Get up to 122-ish. Clean out all the stop losses, clean out all the stale positions, stale shorts, and that to me has got to be your focus over the next 16 hours, especially in that North American session. Sterling data, lots of other things coming out. And then when you come into Thursday, well, actually, it's at the end of Wednesday, I should say. Today, what am I saying? Thursday. So Thursday in Asia, if you look at 4 a.m., we have got the FOMC minutes. Sorry, I'm talking Thursdays. So we've got these minutes coming out. It's going to be pretty exciting. Once again, looking for dollar direction. Is the Fed going to hold their stand? From everything that we've seen, they are. And that's sort of holds that dollar down. If they came around it, say something weird was like, yeah, we actually had a discussion about potentially bringing that forward, well, the dollar would go through the roof. I can't imagine that, especially the way that the Fed officials have followed up their spiel on, holding their stance. Now, if you've got Metastock, you can also come in, get onto the central bank and policy events, and you can actually come in and actually follow what events are coming up, what releases there are, and that will put you in good stead to sort of keep track of, what's going on with those releases. Okay, no open market events. So just clicking back on the right page. So keep an eye on the central banks, keep an eye on the FOMC minutes. Dollar CAD's got to be on your radar. We're getting some nice cruisy moves to the top side, but we aren't getting the follow through which is if we had US dollar direction here with momentum, like US numbers, this is what we're looking for with those CPI numbers, then you'd be killing it. At the moment, there's small opportunities around the place. You can pick them off, but just make sure you are following the numbers here, because it's all, this is just going to roll on. So, and from the FOMC minutes today, in the North American session, we may get some clear US dollar direction out of that. But if you don't, focus on the CAD, Euro, and Sterling. They're the pairs that have got the data coming out, and they will have fresh momentum. That's what it's all about, right? And then Thursday's trading, there's another whole bunch of things coming out, which we'll focus on once we get there. All right, guys, that's it from me. Have a good trade day. Plenty to play for at the moment. I know the Asian sessions have been very quiet. Look at the ranges here, like almost hardly moving, but they will kick in once that North American or European North American sessions kick off. That's where the action is still at the moment. And that's pretty much it. Bitcoin's taking a bit of a rude shock to the downside. Check your cryptocurrency portfolios, because that stuff is starting to dribble off. All right, guys, have a good one. Cheerio.